Okay, good morning. Thank you for joining us for day 5 of the New York State Craft Brewers Conference. The conference itself is presented by DWS Printing, and today's sessions are all presented by Yakima Chief Hops. And today you have entered the session called Accounting 101. We're lucky enough to have David Oksenhorn from Marcum Public Accountants with us. David is based in Long Island and has a presentation he'd like to share with you. If you have any questions, please put them in chat. You can chat with each other as well. Use the chat function. Keep your microphone on mute. But if you want to turn your video on, it's always nice to see each other and see faces, especially during this time. So we thank David from Marcum. Marcum is a fantastic partner of the New York State Brewers Association. It's because of partners like Marcum that the conference is completely free for all brewery members to attend this year. So I will turn it over to David to share his screen and initiate his presentation about Accounting 101 for breweries. Welcome, David.
Thanks. So I'm going to share my screen here. Okay, so as Megan said, I'm from Marcum LLP. Just a super quick overview. We're a full service national public accounting firm. I'm in our firm's food and beverage group with a focus on craft breweries. Passion of mine, and definitely enjoy working with all of my brewery clients. So we'll start up. I was putting together this presentation and struggling a little bit with kind of the format of it and how to put it together and kind of just overall framing it out, just with it being virtual. So I asked a friend of mine who does a lot of presentations just for some advice. And he went to the old standard of, well, just picture everyone naked. And I said, well, it's going to be Zoom and I'm probably not even going to see cameras. So how do I go about, what like? So then he sent me this, which is a group of naked brewers. And they said, listen, if you have some people in the audience who are a little grumpy, here's what they might look like. So the things I'm going to cover here, we're going to do some things starting up, things to keep in mind early on to avoid some issues, basic understanding of some accounting terms and financial statements, essentially what makes up your books, some things to keep you on track when you are up and running, a real quick look at some federal tax credits, just for some things that you may or may not already be aware of, just to keep in mind. And just kind of sprinkled in just to kind of break things up. We'll take a look at what I like to call what's wrong with Dave's Beer Corner. I'm also a home brewer, so I'll tell you about some of the early and continuing brewing blunders that I have, and happy to take some feedback in the chat if there's any suggestions to make that better for me. In addition to what we're going to do throughout it, and we'll see if it doesn't work, we can use the chat function. I'm going to have some polling questions just throughout, just to get a general idea of who's in the audience and how they're set up, so that way I can tailor the presentation a little more where possible. So again, we'll actually use there'll be links for the polling questions you can answer, and then we'll regroup with the group just briefly afterwards to go through. If that doesn't work, we can always just do it via the chat function. So we'll start off with the first polling question here, just to get some basic information of who's here. So Megan, I don't know if you could put that up in the chat and then they can click that.
I just posted the attendee sign-in sheet, and now I'm going to share with you the link to the first polling. Take a second to sign the attendee sheet, and then here's the polling link right there for you. It'll just take you a moment. You have responses coming through there, David?
Yeah, I got one response so far. Let's see. I'll give it another minute. Oh, it's more coming in. Three, four. Get another 30 seconds or so. At least we got some metrics. Okay, we got 15 people here. Got 6 responses. Give another second, try and get to 50%, and then all right, well, I don't want to keep you guys all in suspense. So just basically some basic questions here. I was just trying to get an idea of gauge of who we have in attendance. So of the 7 people that responded as far as the age of the brewery, it looks like the lion's share of you guys are 5 years or older. The split with the remainder was between 1 year or less or 2 to 5. So most of you guys have been in existence for a little bit. Most of your brew houses are around 3 to 9 barrels, roughly. We've got some people that are 10 or greater. Looks like most of you have somewhere around 1 to 5 employees. Some people have at least a small amount of accounting, or actually 100% of you guys said that you have a small amount of basic accounting or knowledge. Looking to learn most about bookkeeping and determining proper classification of expenses. So I'll definitely keep that in mind, and then wherever possible, we'll try and answer any questions on that. So just, I know a lot of you guys are already set up, but even if you are set up, there's things to have in place just to make sure that everything's running proper and you're able to track things. You want to have systems in place similar to the way you do for brewing, just from an accounting or bookkeeping standpoint. Systems including tracking inventory, books and overall books and records, and then things to help you price your beer. So no matter what stage you're in, you want to make sure you have these in place, and you can always be revising them or strengthening them or seeing if there's ways that you feel that could be better presented that makes it easier for you. So inventory, maybe you're tracking this just via QuickBooks. Maybe you're even doing it just in Excel and then bringing that in later. Some brewers maybe using something a little more robust like Ecos or Orchestrated Beer. Books and records, most people are using QuickBooks. Things to keep in mind, and we'll discuss a little more later. Doing regular reconciliations of your bank accounts, credit cards. Essentially, the better organized you are, the less time it's going to take at tax time, and it's going to also provide you with better analysis in your day-to-day expenditures, profit analysis, etc. So things we'll go into in a little more detail later, but just key foundations to keep in place. As it relates to pricing your beer, keeping these things into context so you can see what goes into your beer as far as pricing in the costs, but obviously knowing that the market's only going to allow so much there too. We'll try doing, so the second polling question I have relates more towards bookkeeping things, but to kind of keep things moving along, we could try using the chat function. I'll just kind of, let's see, where's the chat function? Just bear with me. Well, you know what, Megan, why don't you try putting out the polling question, because I'm having issues with the chat.
Sure.
Put it in there.
Yeah, no problem.
There's only a few on here, and we'll see what responses we get.
All right, Jason, we're counting on you to be the first again.
If anyone's having any issues and they want to just put in the answers into the chat function, the questions asked basically here are, what kind of bookkeeping program do you use? Who's maintaining the books? So that could be you, inside or outside bookkeeper, maybe your accountant does it. And if there's any terms, maybe things you don't understand that you often hear accounting wise. So maybe things like EBITDA or cash flow, or if there's something else, you want to just put that down. Oops, I'm getting some responses now. Looks like everyone's using QuickBooks Online or a desktop version. 50% of you are maintaining your books yourself, and then the rest is split. It looks like it's between a business partner, outside bookkeeper. Line share people don't understand EBITDA, so we can go into that a little further later. I'll make a note about that. So here we'll go through just some of the things that make up your basic accounting and financial statements, just to give you like an overview. Obviously not looking to teach a college course accounting 101 here, but just to have a basic overview of what's going on. It'll make it easier for you to understand the different components and then have analysis in your day-to-day in an annual basis to see how you're doing. Maybe there's things you can cut, and we'll discuss that in a little more detail, but just high level, we'll just go over just some of the components here. So first off, you have your chart of accounts. These are going to include a variety of different accounts, balance sheet accounts, which is going to be things like assets, liabilities, equity. You're going to have your profit and loss accounts, so things like sales, cost of goods sold, so things that go into producing your beer, and then general administrative expenses, so things that aren't necessarily directly related to the sale of goods, but related to running your business. And a lot of this is going to depend on how you want to put this together. You can be super detailed on this. So for instance, a lot of people just have a general account that may just say equipment as far as an asset they have, but others might want to break it down really granular. So fermenters, bright tanks, inventory can be just inventory, or you can really go detailed into it and list out, if you have merchandise like t-shirts, glassware, raw materials can just be raw materials, or again, you can make that a lot more detailed, hops, grain, finished goods. It's not set in stone what you want to do. And if you feel like over time that certain things are growing, you want to see year over year where certain expenses are increasing or what you're holding at one time versus another. Let's say in 2020, you had a crazy amount of merchandise and you're not really seeing any of that move. So you want that broken out so that come 2021, you can analyze that and say, you know what, let's buy less. You can do that. And the books are a living, breathing thing. So you can, over the course of the year, change things, make accounts inactive, or add new accounts. It's completely up to you. The only thing I would say are certain things like loans, you should always track separately. You don't want to lump all those loans together. If you have debt with maybe banks or individuals, you want to track that separately so it's easier, so that stands out. Same thing is actually equity. You could probably do either or, where you can have, if you're say a partnership and you have a number of different members in there, you can choose to track it all separately, or you can choose to just have it all as one lump number, as long as it agrees to either your tax return in total for all the different investors or people involved, or if you use a financial statement, that agrees there too. On the profit and loss side, again, it can be as detailed as you want. Sales can just be sales for just overall sales inclusive of beer and merch and anything else, or you can break it down, draft sales, can sales, growler, crowler. Some people like to see every little line item, especially COVID times. Maybe they want to see, okay, we've moved towards a lot of can distribution, and obviously we're not really doing any tap room sales, or it's been minimal. We want to see how that ramped up versus other years. So it's completely up to you. Cost of goods sold, expenses we talked about, which is similar to on the inventory, raw materials of expense, or if you want to break it down, hops, grain, etc. You do want to make sure that any of the related accounts are grouped together. So if you do decide to have inventory broken out into those different components, that at the end of the day, the total inventory is going to be X, and then all those sub accounts are going to roll up to it. So you'll have inventory at the top, let's just say it's 100,000, and then below that you might have grains for 50,000 and hops for 50,000, for example. Other thing too, which you can choose to do, some people find it helpful, you can break out some of the payroll salaries. You can break it down between brewers and bartenders if you have that. So then you can have different departments there, between the cost of goods sold workers versus the people that are general administrative, so brewery versus tap room. If you want to see that, but you don't want to have to go through and actually update your books accordingly, a lot of payroll companies can put people in different departments in their reports. So you can always see it that way. You don't have to necessarily record it in your books that way, but you can have those people in different departments within your payroll reports and then periodically look at that to see who's in there. It helps to see things in more of a divisional view, which some people find to be helpful. So moving on past the chart of accounts, you got your chart of accounts set up for all your different income, expense, and balance sheet accounts. What makes up our basic financials? We got a balance sheet, an income statement or profit and loss, and a statement of cash flows. So we'll go through again each one of these in a little more detail just to give you a general overview. So first off, balance sheet. This is going to consist of information at a specific point in time. So for example, December 31st, 2020. And the balances here are going to roll over and accumulate each year. And it's going to continue to, as opposed to your profit and loss accounts. So we go further along, we have our current assets within our balance sheet consisting of things like cash. You can either be on an accrual basis or a cash basis. A lot of small breweries tend not to be on accrual basis just because you're not really maintaining any receivables, because most of your sales are going to be immediately collected in the tap room, and you don't generally maybe have that many accounts payable things that you're paying over time or other expenses to accrue. Some people like to track it even if they're not necessarily on that basis for a tax basis. They like to see that maybe they are maintaining some payables over time. From a tax standpoint, there are benefits to being on accrual basis in some instances so if you pay for certain expenses, if you incur certain expenses but didn't pay them by year end on a cash basis, they wouldn't be deductible. But if you are on a basis, you can accrue those expenses. So for instance, say you received a large shipment of grain in December but didn't pay that out till January, then you could then pick up that expense in the year because it was incurred during 2020. And as it relates to accounts receivable, just a quick clip here, just as it relates to write-offs. If maybe you have some people who aren't paying and what that whole means.
These big companies, they write off everything. You don't even know what a write-off is. Do you? No, I don't. But they do. And they're the ones writing it off. I wish I had the last 20 seconds of my life back.
So moving down a little further, additional current assets, we have inventory. We talked about this before, but just going a little more detail as to what inventory consists of. Materials and products on hand, but we haven't sold them yet, or we haven't utilized them within a product. They're not going to immediately go to expense. We're going to maintain them at either a lower of what we paid for them, or the cost, or what we expect the net realizable value to be. Things like raw materials, work in process, finished goods, which would be kegged or packaged beer. Maybe we have packaging materials on hand. We might want to put that in inventory too if it's significant. This just shows just the general flow of how it works as far as your books are concerned and just the general process. You're going to purchase your raw materials. You're going to convert that into like work in process or beer that you're brewing. And then obviously your finished goods or your packaged beer. And all those different components are going to be part of your balance sheet inventory. And then when you sell it or you use it, then it's going to flow to your cost of goods sold and be expensed within the income statement. So we talked about current assets. Long-term assets are going to be the other part of our assets. Anything that's going to be not readily converted to cash or consumed within a year. So these are going to include things like fixed assets, which we'll discuss in a minute, intangible assets, and security deposits. So on fixed assets, we have the choice to determining whether or not we're going to capitalize it. So we're going to put it up on our balance sheet and it's going to sit there as an asset and depreciate it, or whether or not we're going to expense it. And the things that come into play as far as when we would necessarily expense something would be if it's like a really small immaterial thing. So maybe we have a lot of supplies on hand, hoses, things like that. We can make an accounting policy for tax so that if it's $2,500 or less, we'll expense it. So that way we don't have to sit there and wait 5-7 years to get the benefit of that expense. Keep in mind from like a reporting standpoint, as far as how things look, obviously taking that expense up front is going to make the numbers not necessarily look as good in that 1 year potentially if you have a lot of those different items. So you had to kind of make that determination, but for the most part, it probably makes sense just to expense those small items. We're also going to have potentially some deposits on equipment that are going to show. So say we took or we put down a down payment on a piece of equipment, but we didn't receive it yet, we'll show that as a deposit. We won't depreciate it. So say we put down $5,000 on a canning line. The following year, we took a loan for the rest, and then we received it in-house. That's when we'll start depreciating it. But until that time, it'll just show as a deposit. We may have a disposal of fixed assets. So maybe we sold them, or maybe they're impaired. Here's kind of like an impaired office equipment here. Also, kind of as it relates to improvements we could have or repairs. So improvements would be maybe building out our tap room or building out our brew house. Things that wouldn't be included there could potentially be architect fees, our plumber, our electrician, as well as the any other things that will go into that place. Repairs would be like if there was an issue with a tank and we had someone come in to fix it, we're going to expense that, and we're not going to be depreciating that over time. Other long-term assets, we got intangible assets. These would be things like trademarks or other intellectual property if we have that. And these are going to be amortized over time. So same kind of idea as depreciation, it's just called amortization. And you're just going to put it over a period of time and get that expense year over year. So get to the first section of what's wrong with Dave's beer. And when we first started homebrewing, a buddy of mine, obviously doing it inside, small kettle in the house, weren't really paying a lot of attention, and we were wondering why it was taking so long to boil until we realized we didn't have the lid on. So we put that in our brewer's log, and we also made sure to put a note to pre-order wings, because why not? It's we're trying to put in place some innovations and efficiencies. Further along with our balance sheet, we're going to have liabilities. So we had our assets first, then we got liabilities, and same as assets, we got current and long-term. Current liabilities are going to be items that are going to be due within a year. If we maintain it, like we talked before, accounts payable, maybe we have credit cards payable, payroll liabilities, sales tax, other tax liabilities. Current portion of debt, so what we're going to pay out on a long-term debt over the course of a year. Maybe we have a line of credit, and long-term items, again, being items due in more than 1 year, long-term portion of debt. Maybe we have loans from owners, or maybe loans from others. Are these short-term? Are they long-term? Kind of important to find out what the intent is, wherever possible, to have a formal repayment term in place. Maybe we're charging interest on it if it's friends and family that loaned us money. Just things to think about, and definitely a good idea if it's going to be something significant that's going to be over time for a long time, that it's papered appropriately by an attorney. Last section of our balance sheet is going to be equity. We're going to have contributions to the business, distributions or draws from the business. Depending on how our entity is set up, we're going to have either retained earnings if it's a corporation, or our capital accounts if it's an LLC or a partnership. Each year, the profit or loss is going to close out to these accounts. So profit's going to increase the capital or retained earnings. Losses are going to decrease it. Same thing, distributions, draws. Money taken out is going to decrease these accounts. And then if people are putting money back into the company as a contribution, it's going to increase it. So our assets minus our liabilities is always going to equal our equity, hence the term balance sheet. It's always got to remain in balance. The equity is also going to show the cumulative strength of the company. It's because it's showing our net relationship between assets and liabilities. So essentially what you own, how you financed it, or debt and equity. A lot of lenders are going to use it. It's a good way of seeing the strength of your brewery and how you're doing, showing what you own essentially versus what is owed. Second section of what's wrong with Dave's beer. More recently, due to COVID, we were doing some bottling outside, and I think that killed our yeast because we had not a low carb beer, but a low carbonation beer that was completely flat. Tasted great, but no head on it whatsoever. So quick clip just to show some home brewers measuring.
I trust you see the message. It has a proximity circuit, so please don't run.
Yeah, I got it. We're not gonna run.
How we turn this thing off?
On the fountain, there should be 2 jugs. You see them? A 5-gallon and a 3-gallon. Fill one of the jugs with exactly 4 gallons of water and place it on the scale, and the timer will stop. You must be precise. 1 ounce or more or less will result in detonation. If you're still alive in 5 minutes, we'll speak.
Wait a sec. I don't get it. You get it?
No.
Get the jugs. Obviously, we can't fill the 3-gallon jug with 4 gallons of water, right?
Obviously.
All right, I know. There we go. We fill the 3-gallon jug exactly to the top, right?
Uh-huh.
Okay, now, we pour that 3 gallons into the 5-gallon jug, giving us exactly 3 gallons in the 5-gallon jug, right?
Right.
Okay.
Then what?
Now, take the 3-gallon jug, exactly 2 gallons in here, right?
Right.
Leaving exactly 1 gallon of empty space, right?
Yeah.
A full 5 gallons here, right?
Right.
You pour 1 gallon out of 5 gallons into there, we have exactly 4 gallons in there.
Yes.
Pour it in there, come on. Come on. Don't spill it. Good. Exactly 4 gallons.
You did it, McLean.
Put it on the thing. Get it down there.
Sorry, I lost my bar here. Just trying to move around. Oh, there we go. Okay, so we talked about the balance sheet. Now if we move on to the income statement or a profit and loss, different than what we talked about before with the balance sheet being a point in time. So December 31st, this is going to show us a period of time. So for example, it's going to show the full 2020 year. So January 1st, 2020 through December 31st, 2020. Our sections here talked about a little bit before: sales, cost of goods sold section, our gross profit, general administrative expenses, and then finally getting us down to our net income. Sales pretty self-explanatory. We talked about that. Cost of goods sold, went into that a little bit before as well. Again, items that are going to be involved in producing our beer and generating sales, things like merchandise, packaging materials, raw materials. We could also have overhead here, and what a lot of people do is allocate a portion of their overall expenses related to production here. So utilities, rent, insurance, things like that. And usually the easiest way that we do that is to take our total square footage of our facility and then allocate it between our brew house and tasting room, and then just taking that pro rata against those expenses. Because essentially, even though you're obviously not you're indirectly charging a portion of that to your customers within the price of the beer, and you can kind of see that if you do this allocation. Gross profit's going to be our sales minus our cost of goods sold, and our gross profit percentage is going to be our gross profit divided by sales. And the importance of gross profit is seeing the margins, because especially most of our expenses are going to be related to the production of the beer and the things that go into it. So we always want to make sure, obviously, that we have a positive margin, but also seeing year over year how we're doing. Maybe we've been able to cut some costs, so that we've been able to produce better margins, or to see just industry-wide, like how we're doing against other people. Maybe there's something that someone else is doing that we can kind of emulate and apply that to our brewery as well. General administrative expenses, again, expenses to run the brewery, not necessarily part of creating the beer though. Maybe we have some sales and marketing expenses, other just regular office expenses. If we choose to allocate here, or if we have bartender salaries, and then getting down to our net income or loss, just going to be profit or loss after all expenses. The income statement overall is going to show us seasonal trends, overall strengths and weaknesses. And the good thing about looking at it on a comparative basis, especially during different times of the year, is we can see when we're strongest. Maybe in the summertime, we have a lot more events, people are outside, and we're doing better. Maybe there's ways within the slower months, like the fall and winter, that we can take some of that and keep that in mind as far as to budget, as far as cash is concerned, or just to see if there's things we can do in the slower months to help us improve if there's areas where we're really, really hurting. Cash flows, basically just going to show us cash flows in and out in our 3 main areas: operations, general operating of the business, investing, maybe we purchase some fixed assets, and financing. So types of things like people investing in the company or contributing, or third-party debt like bank. Most bookkeeping programs will let you do this, so it's not like you need to do this from scratch. QuickBooks, I know, can do this. I think some people mentioned they use Xero. That can be used as well, or maybe they're just doing themselves, something you can put together if you felt like it was really going to be something that you could use. And then on a period by period basis, you can basically see if you have a net decrease for that period. Maybe it's attributable to one specific thing. You purchased a big piece of equipment. You have some new financing, maybe some new improvements, or maybe unfortunately you just had a really large loss in the period, and that's why you're declining. So just things to kind of keep in mind, helpful tools. So here's our third polling question. We can put that up. Megan, I don't know if you can put that down in the chat.
Doing it right now. What's up?
Okay.
I was trying to study the photo on your slide. Trying to figure out what movie that was from.
It's from Old School. So just two quick questions here. I see some people are writing in, but we're looking to see how often you reconcile your accounts. So these would be things like bank, credit card, loans, and are you analyzing your books to see how you're doing? And happy to say that everyone's saying that they're analyzing their books to see how they're doing, so that's great. We got a split. It keeps moving around, but it looks like most of you guys are doing things on a monthly basis, at least, or now actually we're at third. Between reconciling accounts monthly, some people are doing it annually, some people are doing it quarterly. Thankfully, no one's doing it never, so that's definitely good because I have seen that response before. So that brings us, so those questions bring us to the next section about best practices. And I talked about it briefly before about reducing time at tax time, but just reducing time in general. But you want to reconcile your bank accounts monthly, credit cards, and your loans. And the reason why you want to do it, aside from saving the time at the end of the year, and avoiding those issues on the bank side, the bank accounts online is only going to show you obviously what's currently available. It's not going to show you anything that's outstanding, whether it's deposits, checks. So you want to always reconcile it. It shows you a running bank balance as to what you actually have in hand. This will help you avoid overdrafts. It also will help avoid inputting duplicate items. You might see that when you go to reconcile that maybe you entered in a check twice. Things like that. It also helps you get into the routine of inputting items regularly. It's also best to record transactions from source documents, things like receipts, invoices, or other documents similar to that. It's going to help you with classification and also help you with the period of the transaction. The bank statements are going to be used at the month just to reconcile. Also can help you identify some mistakes. Maybe a vendor overcharged you. Hopefully that isn't the case, but that'll come out. Reconciling also allows you to check all the transactions, make sure that you've captured everything so that you're not missing any income and expenses when it comes down to reporting time. I think most of the people are saying they use QuickBooks, so obviously I think everyone's familiar with that. It does have a reconciliation feature there. It's pretty self-explanatory for people who haven't used it before, though. It's just going to be entering some basic information from your bank statement, such as beginning balance, your ending balance, statement ending date, and then you're just going to be checking off deposits, direct debits, checks, and other things that cleared. Credit cards, same thing as the bank statement. You want to make sure that you capture all expenses on there. I know I talked just real briefly about accrual basis and cash basis. The good thing, and it kind of lends itself again to making sure that you capture all expenses. If you're on a cash basis, you can't accrue expenses, but if it's paid on a credit card, but you didn't actually pay off the credit card balance yet, it's still deductible. So let's say in December, at the end of the month, I had all these expenses. I charged it on my business credit card, but I didn't actually pay the credit card statement until January the following year. I can still get the deduction for that. But if I'm not reconciling my account and making sure that all the transactions are recorded in my books, I might be missing those expenses, and then I'm not getting them until the following year. So you definitely want to have that in there. Other thing too, we talked about as far as reviewing profit margins for pricing the beer and cutting costs. Loans, want to reconcile that monthly, making sure that our principal portion of our payments going against the loan and our interest portions going to interest expense. If you are maintaining receivables, if maybe there is like a bar or restaurant that owes you money for a keg that you're looking at that on a monthly basis to either collect it, or maybe it's not going to be collected, you can write it off. Or if you think it might come in, but it's not coming in now, reserve for that now that maybe it's not going to come in. Another tip that you want to do, I always tell people to make sure they run all the income and expenses through the business bank account and the credit card account, the business credit card accounts. I know it might sound pretty simple, but oftentimes people be like, oh, you know what, I was buying things and I forgot my business credit card, so I use my personal credit card. Well, now you have an extra step. You have to get that information from your personal credit card statement and then bring that into your books, as opposed to it coming from your business credit card or your business bank account. Other things too, maybe you needed to pay it personally because maybe there wasn't cash in your business account for one reason or another. One thing I tell people, obviously, if it's an emergency thing and you don't have a way around it, that's one thing. But otherwise, if you foresee having to pay something personally, maybe there's a cash downfall, take the money personally, deposit it into your business bank account, and then pay it from there. It makes it easier to track, makes it easier to maintain receipts and things. And it's also easier to substantiate, God forbid you had an audit. That way you're not commingling personal statements and business statements to try and figure out all the expenses and income you have for the year. Doing these things and keeping track on a monthly basis also helps you see where you are and where you're going. Obviously, we know cash is king, so you want always making sure that you're budgeting for the unexpected and future costs. And like I said before too, reducing time at tax time. The cleaner your books are, the less time your accountant's got to spend. So hopefully that'll reduce some fees on that aspect of it too. Because they're not spending as much time, maybe not less time speaking to you and going through questions, especially if you haven't reconciled regularly and maybe you're missing reconciliations throughout the year. Maybe also depending on where you are, I know some of you indicated that you do use an outside bookkeeper or a business partner to handle the books. For those of you who don't, or maybe finding it difficult to maintain as far as timing, maybe you want to address if it makes sense to hire an outside bookkeeper. This will help you maybe focus more on growing the business, brewing, recipe formulation, things like that. You still want to stay close to the numbers either way, just so you understand how things are going, things are doing. But maybe it makes sense at some point to step away, incur a little bit of cost to do that, but maybe it's going to be helpful to you as far as growing the rest of your business. Our next section is all about compliance. Put up on here just the basic compliance things that all the brewers had to deal with: TTB, New York State excise tax, overall income tax, sales tax, payroll tax, New York State beer bottle and can deposit. This is something really important that I know was brought up a handful of times at some of the brewers meetings. I know Paul Leon wrote a blog post on it. If you're not familiar with it, I highly recommend you take a look at it. The post is really good. It gives a quick overview, which shows the requirements. I know that New York State is starting to crack down on that. So you want to make sure that you are in compliance and you are registered if you are required to do so. As it relates to all these things, obviously making sure that all your registrations are in place properly and that you understand your requirements. All these different things have either a monthly, a quarterly, or an annual compliance requirement. Just make sure you understand what's due when and also who's handling it. I've seen instances when some brewers don't really know, or I thought that one person was handling something, whether it was an accountant or an attorney, and then it turned out that people weren't on the same page. Things were missed, things were late or not paid, and then there was issues to deal with. So make sure you understand who's dealing with what and that everyone's on the same page. Another thing to keep in mind, which is really important, any of these taxes, it's not your money. So what I mean by that, sales tax, can deposits, payroll tax, all those things that have to be remitted that are being withheld, whether it's through money from customers or money that's being withheld from payroll for employee checks. You always want to make sure that those are remitted, and they can come after you personally if you were to not pay it. Oftentimes I find a good practice is to maintain a separate bank account, segregate some of these funds like sales tax or especially the can deposit. In extreme cases, if you are delinquent in paying and you're not staying on track with a payment plan that maybe was set up, they could close you down. I mean, I've seen instances, not necessarily in the brewing world, but other instances where someone is not paying sales tax, was in a sales tax agreement to pay over time, stopped paying it, and New York State just went to their business one day and just padlocked it. So you can't stick it to the man. So the payroll and sales taxes are personal. As far as if the business can't pay, you're personally liable. So kind of keep that in mind. Other thing, keep in mind, God forbid you are in non-compliance, it's kind of saying you're sorry. If you find yourself in a situation where you're out of compliance, you realize something wasn't done, it's best to come clean, work out an arrangement before things get worse. Most of the government agencies are willing to work with you, potentially waive some first-time penalties for reasonable cause. But it's usually best to consult a professional first, just explain the situation, make sure that it's being dealt with properly, whether that's an accountant or an attorney, depending on the matter, but definitely things to keep in mind. Last polling question here, just seeing who's on our team. This one here, just trying to get a gauge of just if you guys use payroll service companies or if you have other professionals that you're using. So see some people starting to respond. Other professionals being attorneys or insurance brokers, those kind of things. So it looks like everyone responded so far uses a payroll service company, so that's definitely good. Looks like the breakdown, most people are using ADP. Got some people having their accountant do it. Paychecks, Gusto, I see a lot of people using that as well. Some people using Square. Looks like we're split almost 50-50 as far as people using an attorney for any kind of general legal, SLA, or TTB matters. And it looks like most people have an insurance broker, which is great too. So I think a lot of people are taking this already into account, but attorneys adding the value, just whether it's corporate law matters, intellectual property, we're doing trademarks, licensing, or overall beverage law, obviously accountants, insurance brokers, which I see people are using, which is great, and the payroll service provider. So everyone's using payroll service providers or someone else to do it, which is great. I always recommend doing that. I think the cost of that, I'm sorry, the benefit definitely outweighs the cost on that. Just making sure that everyone's paid timely and that you got your payroll tax deposits made timely as well. You don't have to worry about that. God forbid you miss one. So it's definitely great to see everyone's doing that. Other things to keep in mind as far as like staying on track as we're moving along, especially with COVID, a lot of people are doing self-distribution into other states, direct to consumer. So definitely keeping in mind any kind of state and local tax matters, sales tax, income tax, when we get to certain thresholds, or depending on if we're doing it direct, there could be some things to think about there. So definitely keeping people in the loop there, whether it's your accountant or your attorney on that, just to make sure that you have registrations in place that are proper and licenses to do that, but also just to make sure that there isn't any other additional tax requirements that you have. Also, we talked about before, just kind of keeping in mind growth, expansion, and need for outside credit. This all goes hand in hand with just kind of keeping track of our books for planning, projections, budgeting, keeping in mind additional costs of outside funding. A lot of banks, depending on how much we're looking to get as far as a facility of money is concerned, might be looking for accountant prepared financial statements, which is an additional service that we're going to need that we might have already accounted for. So kind of just keeping that in mind, if you are approaching a bank on something, you might want to ask these kind of questions. And if they do come back with a requirement like that, you can ask your accountant what that cost might be, just so you can kind of factor that in. Last items here, just real briefly, just some credits and incentives as it relates on the federal side. Research and development tax credit, it's very well aligned with the brewery functions as it relates to us getting a benefit for any wages that we have that are applicable on the brewing side, as well as any of the supplies, or if we have contractors. Going to factor in things like development of new product recipes, perfection of existing products, those kind of things. And even if you're not profitable, if you're 5 years in if you're under 5 years in existence and under $5 million in gross revenue, then we can take that and make an election to offset our payroll taxes by it. So it's definitely something to keep in mind if you're not already addressing it or your accountant isn't already addressing it. FICA tip credit, something to keep in mind. Most payroll companies will report this for you so that your accountant can report on your tax return for any brewers who are serving beer on site. Our work opportunity tax credits, so if we're employing people in certain targeted groups, so veterans, other recipients that are listed here, you can receive up to $9,600 per year per employee. Just something to keep in mind that if you do find yourself in a situation where you're hiring one of these people, that you alert your payroll provider, because there's things that need to be reported up front to be able to be eligible for these. So that's pretty much everything I have here. I'm happy to field any other questions that people may have. We can look at the chat function.
Dave, there's a question here from Dubco. They said, do you have any advice for if ownership wants to use a personal line of credit to pay for things in business occasionally?
You could definitely use the personal line of credit. I would just make sure that you list it on there. So like if you're paying, I guess it depends on who it's attributable for. So it's attributable to one of the owners of the brewery, then you want to make sure that it's recorded that way. So we're paying for grain, we're gonna have a grain expense, and then that money is gonna be technically due back to that one individual who's liable for that line of credit if it's on a personal side. So you could definitely do that. If it's not viable, maybe it's not possible to have a line of credit through the business itself, that's fine. You just want to make sure that you're tracking it properly so that even if you're not necessarily going to pay back that individual to pay the line of credit off, that liability is shown, or maybe you're listing it as contributed capital to the company, something you can address.
Okay. What other questions do you have? I see a question coming in from Lori. Lori, you can unmute yourself. Go ahead and ask it to Dave.
Sorry, it took me a while to unmute. Hey, Dave, I just wanted to ask, is there an acceptable way to allocate overhead other than by square footage? Because my tap room and my production area are about the same, but my production area uses way more utilities, resources, etc.
You could definitely do an estimated allocation on the utility side based on the usage. I mean, the only way to accurately do it would have like a meter on the equipment, but it's not cost effective to do that.
Yeah.
I mean, some people have looked into it because there are breaks as far as like the sales tax on the utility side, but then you have to have a separate meter on there and it gets kind of expensive to put that in place. I mean, it's worth it, but that'd be, I mean, you can estimate it, like if you know what it's rated for roughly on an annual year as far as usage, then you could do that. Or you could just say, you know what, I would think that most of the utilities are going to be like 80-20 in favor of the brew house because that's where all my equipment is versus I just have lights and, you know, a few other miscellaneous things up front that aren't really going to use much. You could definitely, you know, weigh it that way.
So I can make a good faith estimate as long as I have a good reason for making that allocation.
It's just for your purposes, more or less, in presentation. At the end of the day, your net income's not going to change. So
right.
Your profit or loss is going to be the same. It's just making things a little more accurate for presentation to kind of see where things stand.
Perfect. Yeah, and for me also to estimate, like, if we make changes, how's that going to affect overall? But yeah, thank you.
You're welcome.
Dave, Jason is asking, he says, might break down LLC protection. I'm guessing what he's saying is, what does the LLC cover you for versus you mentioned something that had personal implication?
Is this related to the question that Dubco asked about the personal line of credit? I guess I wasn't quite following.
I don't know, Jason, do you want to unmute and ask the question?
Yeah, I'll do it through my mask of sketchiness, but I was just bringing up the point. I have no knowledge on it, but I was worried that if you use personal monies and do the mixing between them, you might risk breaking down the shield of the corporation.
It won't pierce the corporate. So I think you're referring to like the corporate veil, essentially, of like having any kind of issues there where they could come after you personally for something, like something happens.
Yeah.
Yeah, I mean, I'm not an attorney, so I can't completely speak to it, but it's not necessarily commingling personal funds here. I guess in the situation that was the question that was asked was, I guess the individual has a personal line of credit and they're using it to help fund the business. So it's either going to show as a liability due to that individual, or it's going to be something that was contributed by them personally. So that doesn't affect the corporate veil in any way. So God forbid, like, let's say someone slipped and fell in the brewery, that they can't come after your personal stuff because you put money into the business personally. This is strictly just going to be tracking the expense and tracking anything that's due either back to the person or a contribution they made into the company.
Does that answer your question,
Okay.
Jason? Okay. Other questions for Dave? You've got him here now. Questions do you have about accounting? I have one question. I used to be a small business owner, not a brewery owner, but is there like a best practice or rule of thumb of how much time you allocate per day or per week toward managing your finances and your accounting? I know you said reconcile everything monthly, but like, is it a good idea, like half hour every Monday, or just do you?
I think it's a good idea to set aside some time, especially for the brewers who are working like odd hours and a lot of hours. Then maybe you're going to say, you know, Friday or Saturday is going to be my day that I'm going to input on my transactions for the books, if you don't have time to do it in real time as you're paying things or collecting things. I mean, a lot of this stuff, QuickBooks is pretty automated, so you can do a lot of downloading from your bank account or your credit card, and then you just have to essentially classify the transactions instead of have to sit there and manually enter it. But yeah, I think it's definitely a good idea to set aside a amount of time. It'll vary based on how much transaction you have. Someone might say, listen, I only have 3 things that go on a given week. Most of the stuff's pretty much the same. There's not much here. I only need an hour a week. And someone might say, oh, I have all these things that are constantly going on. I need 5 hours. So you'll kind of know over time how long it's going to take you to do. But I think that's definitely a good idea to kind of block out some time so that you don't kind of keep it as an afterthought.
Thanks. David has a question here. He says, are there any roadmaps for cash flow? Seems like the hardest part to understand. Decision-making to me seems to require and understand cash flow.
So like I said before, a lot of the bookkeeping programs will run the cash flow statement for you, and then you'll kind of see how it's laid out. As far as roadmaps, the 3 key components are going to be your operations. So you're operating at a profit or loss, or overall, like if you have changes in those type of things. Investing being if you're buying equipment, and financing, so people putting money in or debt that you owe. And yeah, decision making is going to take into account a lot. If you have poor cash flows, then obviously you're not going to be able to meet your needs of the business, and you're going to have issues over time, whether it's getting outside funding, because they're going to look at it and say, well, you don't have the ability to service more debt. So things to keep in mind there. I'm trying to think if there's any other question that you had on that. I guess, I don't know if you want to elaborate more on what part of it you don't understand, if it's maybe the breakdown of how it is, or.
Sure. Can you hear me?
Yeah.
The P&L seems pretty basic, but when it comes to looking at a cash flow, you got depreciation comes in, which to me is more of an accountant, and I'm not understanding that a little more is like our accountant, and that's not what I understand as well. So that's kind of the crux of it. There's that rolling amount, and then your decision making seems to just flow from, okay, are we going to have a couple, like setting aside money for expansion or whatever, seems to just be super important cash flow. Obviously we don't want to run out of it if we're like a tap room, that gets paid quickly and pays our expenses quickly. It just seems to be the hardest one to grasp, I guess.
Yeah, no, I understand that. I think the mechanics of it, the way it's laid out, might be a little confusing, but essentially kind of think about it as it's just cash in and cash out. So it is going to show depreciation on there, but it's essentially being added back to not include it. So it's a presentation thing. So you're going to have depreciation expense, which is going to reduce your net income for the period that you're looking at. But then when you get to the cash flow, it's going to show it on there, but it's essentially an adjustment. So that at the end of the day, it's going to show a net decrease or a net increase in your cash for the period. So if you're looking on a full year, all those different components are going to come into play, and it's going to show you, all right, my cash at the end of 19 was 10,000, now it's 20, so it went up 10. And then how is that broken down? All right, well, I had net profit for the period just from operations of 5, And then, I bought some equipment that decreased it, but then some people put some money in that increased it. And it's just going to kind of show you that all laid out. You don't necessarily have to look at the cash flow. If it's confusing to you, you could just look at a balance sheet year over year as well as a profit and loss to kind of get an overall gauge. It's not going to be the same components and exact, but if you want to just kind of see, it'll give you at least some gauge as to where things stand there. But the cash flow is going to show you strictly like increase, decrease cash. So if you want to see that part of it, it's probably your best bet. But if you're getting tripped up a little bit on the way it's laid out, you could definitely look at a profit and loss or a balance sheet year over year and see that increase and decrease in different things.
Thank you.
Yeah, you're welcome.
Okay, any last minute questions here? Probably a million. Everyone's heads are probably spinning and they're eager.
My contact information is on the, well, it was on the presentation. I'm not sharing that right now, but Megan, feel free to put my contact information out there. So if anyone wants to send an email, or I'm happy to, answer a quick phone call or something. If someone's like, listen, you got 5 minutes or 10 minutes or whatever, I'm always happy to do that. I wish we were in a better time right now where I could say that I could meet up in person for beers, but hopefully we get there soon.
Absolutely, we will. Well, thank you all for joining myself and Dave Oksenhorn from Marcum for Accounting 101 for Breweries. The next session at 2:30 is Modern Approach to Microbiology. I just posted the link in the chat there. And all of these sessions, including the one you've just participated in, will be available on the YouTube channel, which is the New York State Brewers Association. Please find the sessions, subscribe to the channel, and see what you've missed. Today at 5:30 is our first of 2 happy hours. We have a special concert from a BMI artist and would love for you to join us for that. That'll be purely social. So come grab a beer, hang out, and see each other's faces. So thanks for joining us. Thank you so much, David. Really appreciate your expertise and all the support that Marcum provides our industry.
Yeah, no problem. Glad to be here.
All right. Take care, everyone.
Thanks, Dave.
You're welcome. Take care.